All right. Well, hello, everybody. How are you today? I'm glad that you joined us. And for our second weekly financial roundtable. So I'm Tom Kuhn. I am your host and curator for these roundtables. And I'm glad you're with us today. We got another great turnout already. This is awesome. Crazy times we're living in. And small business, as Shakespeare said, the course of true love never did run smooth. Financial management as a small business owner and leader, whether you're in the school industry, the salon industry, certainly today is about the schools, is times that really require community, best practice sharing, and I'm thrilled to have the opportunity to be with you today. So Qnity is the name of the company that I'm CEO and founder of. We've got a great team. We're very passionate about the professional beauty industry and the sustainability, the financial sustainability of the professional beauty industry with a huge, huge passion for the next generation joining the industry. And so thankful that you are in the school business to usher people into this great industry. So the whole idea behind this school roundtable, if you don't know me, you don't know us, we've been hosting a weekly financial roundtable for 45 weeks. We just finished about an hour ago with salons and spas. And we had so many school owners that were part of it. They asked us to do something very similar with schools. So when asked, we generally say yes. Okay, so anyway, this session is noon Central Time on Wednesday. The other roundtable that we do is 10 a.m. Central Time, also on Wednesdays. So what we're gradually doing is developing our own brain trust. This is the brain trust that we've developed, some of the brain trust we've developed for the salons and spas. But we're at week 2 and we've already got a great brain trust. Last week, we had Susan Heisey, we had Nicole Cumberlander and Linnell Lynch. By the way, Linnell, happy birthday. I think it's your birthday if you're joining us today. I know you're on with us this morning, so we wish you a great day. I'll spare all of us singing happy birthday to you right now, okay? We had great light bulb moments last week from these 3 amazing women, school owners, industry leaders, very passionate, not just about their business, but all of your businesses, and really the collective opportunity for schools. And certainly schools have their challenges, issues, and opportunities. And the whole idea is to find light bulb moments together. Here's some great quotes by Nicole. It's my ministry to be a school owner. You got to be called to do it. What a great quote. I love that word, ministry. Linnell talked about eliminating expenses that weren't critical. They also found investments that led to innovation, technology, and education. And Susan had a great tip, was to add a make payment button on your website to collect tuition. So we got a lot of great feedback from last week. Special thanks to Pivot Point, who joined us as sponsors in this. The Pivot Point team is amazing. We've met so many people at Pivot Point. We're so impressed. So shout out to Pivot Point, the leadership team, the entire team, and so glad that you stepped up to help make these possible. So today, one of the things that we're going to include is we asked about benchmarks last time, and it's come to my attention that benchmarking isn't necessarily maybe at the level that many of you might see. Several of you might have benchmark opportunities, maybe with a franchise that has a contained group where you're able to do that. But the school industry is very similar to the salon industry. And Jarrett was a guest last week. I never met Jarrett before. He sent me an email. He was all pumped up and he was jazzed because he thought, finally, spending more time talking about benchmarking. And he's done a multiple year study on school benchmarks. So I had no idea that already in week 2, we'd be getting to benchmarks with some actual data. So we're going to get into that in a little bit. One of the things to share with you is at Qnity. Qnity's an education company that also provides advisory services and visual tools. We like to make financial management and financial skills simple and visual because we know many of the entrepreneurs that we work with and students absolutely prefer things to be simple and visual, simple but not simplistic, which is a very important distinction. So anyway, Qnity has developed a model to look at small businesses inside and outside the professional beauty industry that breaks the business down to what we call 5 different functions. Includes marketing, education, operations, and human capital and finance. I won't get into this whole methodology and all that. It just gives me a good introduction in terms of what our focus is on these sessions together, as well as what some of our deeper dives in. So anyway, I have my colleague Michelle with me today. So let's just do a quick a poll here. Actually, I'm sorry, this is a recap of last week. So last week we did this question. So what is the level of benchmarking and best practice sharing in the school industry? And only 33% of you said high. The majority of you, it looks like what, 2/3 of you said it was a low or medium. So definitely an opportunity for some benchmark and best practice sharing. We're also going to get into human capital today because it's clear that finding instructors and finding talents is a challenge for many of you. So we'll get into that. But let's get to finance first. And let me see if we've got Jared with us here. And if so, Jared, I don't know if you're on camera, if you're on mic or whatever, but let's meet Jared Sanders.
Morning, Tom. How are we doing?
I'm doing great. Jared, how are you? Are we able to see you today or?
I've clicked my video. I can see myself. Is that
okay? All right. You know what? I'm going to maybe I can't. Hold on. I'm going to stop my share here. And there you are. Okay. Yeah, that was weird. I when I was sharing the screen. Well, good to see you, Jared.
It's good to see you. I'm glad to be here.
So I'm sitting out there, or I'm looking at these participants and saying, okay, we've got a CPA and Tom, and they're going to talk about benchmarks and numbers. And this is very risky, Jared. Let's be honest, okay? Because it might be something that might cause people's drift of attention, okay? Let's be honest. Having said that, there's a huge need and a huge need to provide information for schools to become more successful. And I think you very much relate with that. Before we get further, let's just real quick talk about who you are, your background. So you're a principal, you have a partner down in Mississippi. What's the name of your firm? And tell us how many schools, how many beauty schools you work with as a CPA providing compliance and tax services.
Certainly. So yeah, the firm name is Lightheart Sanders. We've been doing financial and compliance audits since 2003. We had an opportunity to buy a guy's practice. He had 10 beauty schools. And this year we're scrambling to wrap up about 110 beauty schools. We do about 120 to maybe 125 total student financial aid audits. So we're very heavily interested and focused on the beauty school industry. And okay. Yeah, that's kind of our bread and butter.
So what you've done is behind the scenes, you've been working to create some benchmarks and, distill it down to maybe a minute here. Your process or couple minutes, we'll give you a couple minutes to do it, distill what you've been working on behind the scenes as it relates to developing benchmarks using primarily on a permission basis, your own accounts to start to gather some data.
Yeah. So, just like school owners as well. I mean, we had clients that made comments to us, man, like how much should I be spending in this area? Like what is everybody else doing and stuff like that? Like those are all common questions that we have as well from an auditor's perspective. You always like to be able to compare what you see with what you would expect to see and be able to say, okay, yeah, this makes sense. And so we did like probably any other CPA firm would do. We went out and tried to find it, and there's just no information. I mean, that's kind of the bulk of what everybody's kind of put their head into. And so we said, okay, well, it's not there. It needs to be. How can we get to where we need it to be? And so we had a lot of discussions with different people and stuff like that. And there's a lot of different problems and issues and stuff like that when you're talking about it. So rather than scaling it to a broad, trying to get everybody in it, we just said, look, at a bare minimum, we have all of our clients' data. We have put it in our system. We can regurgitate it out into a spreadsheet. It's a massively long, boring spreadsheet that our team put together, but it basically allowed us to take our client data and boil down and start to get the groundwork. So we started that back actually in 2016 with the 2015 audit. And each year we just continue to add to it to gain more entries into it and try and make it a little bit more robust.
All right, great. So let's go to, you know, I had a similar quest with salons and spas that you and I talked about. We'll get to that later. So I can very much relate with the challenges that go into doing something like this. And number one challenge, this certainly with salons, not spas. Spas actually have a published set chart of accounts. All right. The salon industry and the school industry doesn't necessarily have a published chart of accounts and format of a P&L that's consistently used. Certainly a lot of the better school owners work together, they figure it out and make it work in their business. But how does that impact your and our ability to create benchmarks that are meaningful? And how big of a challenge is that for you to try to give information that many school owners are looking for?
Yeah, I mean, it's huge. You know, we kind of mirrored our project off of a HUD project that a bunch of CPAs got together. And, you know, HUD, though, has the same thing about what you're talking about. They have a specific chart of accounts. Like they tell you this is the data that they need.
Jared, real quick here, let's describe who HUD is, okay?
Housing of Urban Development. So your apartment complexes and stuff like that are subsidized or lending and stuff like that. So, you know, for most schools, when you upload your audits into Easy Audit, it's a very firm specific. I mean, each firm kind of has their own letterhead, their own style of how they like to have it look and stuff like that. HUD kind of took a different approach from the Department of Education. They said, no, you're going to input these specific account numbers, this specific information. And so it normalized across the industry. When you back that down to schools, the problem is that even within our client base, you know, individual schools have just a very dramatic difference in how they record things. Something as simple as tuition, right? So everybody says, well, okay, let's look at tuition. Well, I loved what Linnell said last week about watching the hours and stuff like that, because it's so key. But it's such a misconception. And what we had some clients that were recording tuition based on hours put in and stuff like that. You had other clients that their tuition accounts were broken out by the source. So they had Pell, direct loan, student pay and stuff. And so what happens is it ends up you have apples and oranges, right? And so that becomes one of the biggest challenges, is to really make sure that the data that you're comparing is equal. And so for our purposes, we have our groupings that we pull accounts together and stuff like that, and that goes to our financial statements. We ended up creating a second group and adding a little bit to our audit procedures, and then some of it was after the busy season, where we went back to our clients and said, hey, can you let's boil this down, you know, and see if we can break this out in a format that we can start to get the answers to the questions that people have. You know, everybody wants to hear what should be the ratio between revenue and instructors, but not everybody keeps the instructor expense separate. So
okay, hold on here. Well, you're hitting on a key point here, okay? And I very much relate with this. So is it a fair statement that everybody wants the data, but everybody's not necessarily willing to put the categories in the same spot to get the data?
Yeah, there's a lot of schools that would love that data, but even in their own internal accounting, they're not keeping track of that specific information.
Yeah. So we talked a little bit about a project that I've worked on for 10 years called the 2 to 10 project. And I could tell you collecting P&Ls from salons and spas is probably similar to collecting P&Ls from schools. I'd refer to it almost as an art project because if you would put them on the wall, they'd all look different. All right. And certainly there's consistencies, whatever, but it makes it really hard. So I'm not going to get on a rant around that. Let's stay unfocused here. So you agreed to, now I want to set you up for success here. So this is a work in process for you. And you're very committed to really getting this information very polished and even better and better. And I want to help you any way I can. Okay. And perhaps through using this as a forum to encourage people, et cetera. But I just think it's really important. I'm looking at the bigger picture here, okay? Do I have your permission to share some of that information? Keep in mind that this is all sanitized. None of your clients, it's okay. I've got your permission with all these witnesses.
Yeah, there's no client specific data and stuff, and yeah, I think it's good opening to the discussion. So
all right, so I'm going to
fair way.
pull up some information. All right, and so I've taken some of the stuff that you sent and I put it into a slide here. But before I do that, a warning to everybody, and this is a phrase that I've oft repeated. And tell me if you relate with this. Those of you listening in. The biggest fan of a spreadsheet is the creator of that particular spreadsheet. I use the chat, you agree, you disagree, Tom's crazy, whatever. So there is a little bit of a warning here. We're going to look at a spreadsheet, but we've got it narrowed down a little bit. Now I'm going to come back to this. Okay, hold on here. There you go. All right, so Jared, here you go. So walk us through what we're looking at and keep it simple here. What I've done is I've taken some of your information that's strictly from the revenue part of P&L and walk us through what it says and what it doesn't say.
Yeah, so this is good summary of the revenue section of our benchmarking study. So and to give you an idea, for people to give you an idea, we include 2015 to 2018 financial statements, and obviously with the extension last year, we didn't do a lot of audits. Your 2019 audits sometimes got done last December, and then we rolled right into the 2020 audits. So as soon as we get past June 30th, we're going to go back and we'll input all of 19 and 20 data. So first thing is to understand this is 15 through 18. But of that, we did 248 financial statements over that 3-year period. So that's what your number of entries is, the number of financials that had that particular data. So everybody had tuition revenue, right? That was one that was this common. Now some had service and some had product. So you can see that there's some that broke out those individual amounts and then some that did not. So you could kind of look at it and say, okay, you know, that the difference between the 241 in the service versus 159, that would be the amount of people that are not. So we already know that, okay, where's the product revenue? Well, it's probably lumped a little bit into the service because they didn't break it out. Same with like books and kits. Very few people would pull that out on a line item. Usually it's under that tuition full revenue. And again, there's 100 different reasons why somebody does that. This is just, okay, this is what we could get. But overall, like you could look and say, okay, I could take tuition and books, and then I could take the retail together, and that would at least give you a general idea. So, and this again is all from a client-based standpoint. So when you're talking about Lightheart Sanders and the clients that we service, you know, the vast majority, or I would say all of our schools are under 10 locations. A vast majority are going to be even under 4. I mean, most of them are 1 or 2 locations and stuff like that. So it gives you an idea that the average revenue for the client base that we have is total revenue is a little over $1 million, 1.1 million. And you can see that breakdown between tuition and retail is about an 85-15 split.
So Jared, then, and I think that's a good way of looking at it. So we definitely got some apples and versus oranges in here, but it certainly seems like the clinic's about 16%, and then tuition and kits, like you said, about 85%. The the question I have for you is, this is per campus or per enterprise? The average of 1.1 million.
That's on a per enterprise.
Okay.
Uh,
Okay. So these are small businesses, with a lot of the same financial management issues that all small businesses struggle with. Let's move on to the expense summary for next. Okay, Jared?
Certainly.
And with here, again, this is where we're going to see a lot of it's difficult. There's certainly things we can extract out of this, but there's also things that just are hard because the breakdown's not there. So, and we did is we sorted it, Jared, by the amount. So what we can see out of this is, I'm just going to look here. It seems to me like most people recorded rent, so it's probably fairly reliable benchmark at 12%. Would you agree with that?
Yes.
And then instructors, 15%, and wages for the rest of the team, 25%. So that's about 40% labor. Am I interpreting this right?
Yep, you're doing great.
And then the book supplies, this one makes me a little bit nervous. That number seems, so this would be kits and books and supplies, right?
Yeah, and it also would include and this is where you get to one of those issues. Like that's also going to include, a lot of people include like your retail product. You can see that that's only got 58 if you drop down there. So most people, when they're grouping their books and supplies, it's really their cost of goods. So if they're not breaking out product that's going to back bar versus clinic and stuff like that, all of that has gotten lumped together because there's not enough breakout to bring that value.
So the let's see, is there anything else in here that you think we can extract, or any other? It looks like advertising most probably break out, so it seems 4% seems to be the norm there. By the way, these are really averages. It's not necessarily best of class, worst of class. It's not necessarily a correlation to profitability. It's just raw looking at the numbers and see where people stack up, right?
Yeah, I mean, there's definitely like things, if we were doing like a consulting aspect and stuff like that, I mean, there would be areas where I would say you'd want to be more aggressive in terms of spending and stuff like that. But this is, again, like I said, it's just a data dump of kind of the best that we could get to at least be able to answer the question of, well, does the financial statement that I'm currently working on, does it look reasonable? Right. And
Right.
so that's kind of what we were shooting for, in terms of, at least let's get as much information down on paper so we can figure out the issues of maybe what we need to do, or what points we could come back to after, or try and fix, or help our clients look at and kind of say, okay, you know what, hey, we need to be tracking this a little bit differently, or recording this, because the financial knowledge and expertise for most school owners is, you're just trying to keep your head above water and keep the department happy, keep NACUS or creditor happy and stuff like that, you kind of bookkeeping by default in terms of, this is what so-and-so asked me to do, or this is what I got, versus really specific management driven decisions.
All right, Michelle, let's do a poll here, and let's see what our group today feels like the average profit is for a school based upon this information. So let's see, get as many of you to respond as we possibly can. If you are, listen, here's what's tricky. If this doesn't apply to you, then just don't answer the question. All right, so here's the question. What do you believe is the average profit, not top performer, but average profit for a school? And there's some other data points that I have a bit as a reference here to validate what you come up with, Jared. So let's see what the group guessed. Jared, can you see the poll on the screen there with us and the tally coming up?
Yep, I can see it.
So it looks like a small percent. We've got a pretty good group. Let's have a few more people respond here. So we're talking average profitability, 0 to above 10%. So we're at about 43 responded. Let's get a few more of you to respond. Don't forget to use the chat during this conversation here that I'm having with Jared. And Jared, just a heads up, we're going to wrap up your segment probably just in a couple minutes here, and I'm going to get it to human capital. But all right, so what we're seeing here is most people believe that it is between 5 and 10%, it looks like, right? But there's 17% that actually believes it's above 10%. So let's rest the survey right there, or that poll. Michelle, I guess we'll go ahead and end it. And let me pull up a slide, because Jared, the conclusion to your study, I don't know this necessarily the conclusion, but what you've been able to do is, let's do the drum roll here. So profit, the big question, and I think what you came up with was 8%. Is that right?
Yep.
So 92% costs and expenses. And I think what you did is you combined cost of sales and operating expenses just into one big category, which I think you had to do. But this is really interesting information. And I don't know if anybody's surprised by this. I'm not necessarily surprised by it, but I think what's important, and I think one of the things, Jared, that I wanted to do today is I wanted to feature you in this conversation and support any efforts that you have and anybody else in the industry. Got a lot of industry leaders on here, and anything else I can support your quest and others' quest for benchmarking data, I'm happy to do, okay?
Certainly.
Do you have any closing words you want to say to our community today?
No, I just, first and foremost, I'm just excited about this roundtable and in terms of the stuff that's being talked about, the discussions, and elevating that conversation about the management aspect of schools and stuff like that. And in terms of, I do get asked, okay, so when are you guys going to release this, right? And again, probably the biggest issue is as we discussed it, it's not in a pretty form. And at least can get that information and stuff like that. But definitely, if there's somebody that wants to get involved and stuff like that, I would love to have that conversation. Ultimately, our goal is to try and get this out and get it developed so that it can be updated on an annual basis, so that schools can actually start to use it, and then that'll allow us then to have those type of conversations about what should your P&L look like from a best practice standpoint, and what areas do you need to be breaking those out. I mean, at the end of the day, financial statements are only as useful as the person using it. And if you're not using any financial information, and you're just hoping that it all works out and your audit doesn't go off on a completely different angle and stuff like that, then you're really missing that management aspect of it. And yeah, any help that we could have, I'd love for anybody to contact me and see what we can do.
Awesome. I shared with you, and I'm happy to share, I've shared with you, and I'm going to share with the group something that we did because of this very need for salons and spas. We carved out a part of the salon industry, and these are businesses that have between 2 and 10 locations. We collected their P&Ls, started out very organically. Jared, as I shared with you, 14 companies, we got to 28, we got up to, kept doubling, And so we got to the point where we're able to give each company an actual scorecard and did a full report that broke down profitability, revenue mix, labor, and this is not a project that I'm going to do again. I got to tell you, it was very daunting, but the information was absolutely priceless. The things that we learned in doing an organized way of data collection, not only about KPI, but also business practices, things that we assume, some of the things that we assumed to be true were, but there were many surprises in it. So It's a worthwhile effort, Jared. I'm happy to support you any way I can. I'm happy to share with you things we've done in 2 to 10, and I hope we'll have you back as a guest, okay?
Awesome. I appreciate it.
And Jared, this does require a virtual applause by members of the community. So thanks for taking your time with us today. I'm also going to award you the $1 Million light bulb for being an official 4th member of the Brain Trust. So thanks for joining us, and thanks for your email. And for those of you that are joining us today, please, if you have ideas and thoughts, you want to be Jared didn't say, hey, can I be a guest? But he got drafted pretty quick. So would love to get your other points of view and meet more of you through this process. So Jarrett, one more time, thank you, okay?
No problem. Take care, Tom.
All right, let's, I've got other things I want to share with you because as it relates to financial management, I love this quote by Dan Sullivan, and that's all progress when you tell the truth. So many of these schools are very small businesses. The SBA would probably maybe even call them micro businesses. Under 5 million would be a micro business. And the reality is small business, financial management practices in small business is traditionally very weak. We did this poll last week, and I think that 53% of you rated yourself high in internal financial practices. And I'd be curious to dig deeper into that. Is it financial practices that allow you to comply and get through an audit? Or are there financial practices that actually help drive profitability and performance? They're different things here. And my observation is that many small business owners overrate themselves as it relates to financial practices. No accusation there to any of you. Excuse me if you, I don't want to say this in the wrong way, but the reality is I'm going to go through certain things that we have found as it relates to small business financial practices. So 74% of small businesses don't have a budget. And here's another one. Again, these are small businesses. 40% of small business owners consider themselves to be financially illiterate. 74% operate without a plan, and 50% say financial management is the worst part of owning a business. So, you know, I love individuals like Jared and his firm and others out there that are really supporting financial management practices for school, which is one of the reasons we wanted to have these conversations. There's financial humans out there like Jarrett, and then there's many of you that are wearing like 10 hats. And it's like, you just do what you can to get the information in the system, comply, make sure that your balance sheet meets ratios as required for compliance. But there's always another level, and I would challenge you to find the next level in your financial management practices. We're going to make a switch here. We're going to get away from this whole conversation about benchmarks and financial management. And I was inspired to have some discussions about human capital, which has a huge impact on financial performance. This morning, we did a whole segment in human capital because a common theme along salons, very, very common, is we have more guests that we can handle. We just don't have enough staff. So we do not have a demand issue. We have a supply issue. And Michelle, let's pull up a poll right now on this one and find out maybe from schools that are participating here today where they're at. So agree or disagree. Instructors are challenging to find and challenging to keep. So agree, disagree, or doesn't apply to you. The next question, so this is just a 2-question survey. A labor shortage is the biggest issue facing our industry right now. That should be now, not. All right, so let's see what people say. We're getting a lot of responses here. 92% agree with instructors. Almost 70% agree about the labor. Let's just see what comes in here. So please use the poll feature. It's part of the rules of engagement to be on here. Is please participate, use the chat, be part of the poll. So this is really, really information. So 72%, getting to about 75% of you are saying the labor shortage is the biggest issue facing our industry right now. Linnell, I think what you told me was that there's 1 million unfilled positions in the beauty industry right now. So anyway, really good information to look at here. So let's let's move over to just some solutions around that, okay? And I'm going to get this thing, make this thing go away. All right, now we had a guest on our salon roundtable, and it was, I think, 3 weeks ago, or Stephanie Jackson. She's got some great research about what really matters, not only to students as they look at decisions coming into school or getting out of school, but also as it relates to the labor force in general. So we've got a recording of that. It's on our YouTube channel. You might want to check it out. Now, I'm going to share with you just some different insights that come from a variety of sources. So I'm going to give you a reference, and what Michelle will do is she will type in the chat a reference for a couple articles. All right. So every week we do a little research coming into these roundtables, and here is one about employee experience. Okay. And then Michelle, I think we have a poll on this. We'll get to it later. So this is an article. It's from Inc. magazine, and it relates to employee experience matters more now than ever. Here's how to elevate it. And it really deals with the evolving needs and the shifts that's happened in the last decade for the workforce. And so some of the needs from a workforce, and really what we're looking at is your instructors and other members of your team, because obviously that's so vital to your success, is to make sure that you have the talent to run your school business. So essential needs, I'm going to summarize a few of them in the article. One is the need for work-life balance, and just allowing them the space to have that kind of balance in their life. Then other needs relate to we're working remotely and also collaborate in a virtual environment. I think that Nicole talked about, last week, just the whole thing of going virtual and never expecting it, but virtual also as it relates to your members of your team. And then the need for personalized employee support. But I want to get to just some key action points that we've seen. And this is a study that relates with not just salons, spas, and schools and the beauty industry, but just overall. So a couple of keys to success is conduct stay interviews. Let me know if you've heard of a stay interview. Now, there's exit interviews, but what about a stay interview? So an exit interview is going to give you the reasons why someone left, but they can't help you make them stay. So stay interviews allow you to understand the issues faced by an employee and work towards retaining them. Ensure you communicate with your employees regularly to understand their pain points and initiatives to resolve them. So I think that's a great one, doing stay interviews. Also, onboarding experience. They properly onboarded into your organization. They feel welcome. They feel like they're part of your community. And it's many put effort into the onboarding experience, but then they're forgotten that this is still a new person 30 days, 60 days, because we just need bodies. We need help, So the onboarding piece is vital. Other is, focus on the physical and mental well-being. I mean, so many that we're working with have addressed issues with mental health and very stressed out leaders, overworked, understaffed, wearing way too many hats. So compensate for that with different resources and different things that are accessible. Perhaps it's through your health insurance company that you provide for your team. There's other ways to provide physical and mental resources for them. Share feedback with your employees. Feedback is a gift. I love that phrase. Feedback is a gift. And if you approach feedback as a gift and approach it that way with members of your team, it'll be received in a way that's super proactive and allow you to really retain members of your team. So these are just a few different tips around that. And but I'm also going to share another article with you, and it's in a very similar thing, but it's also going to give you some other things to do. So 5 ways to enhance your organization's employee experience. This is another article. Michelle will also put this in the chat. So this is really what it says is 4 out of 5 employees would prefer new or additional benefits to pay. And one of the things that Stephanie found in her survey is looking at students. that more students want to talk about their schedule than their pay when they go out in the workforce. Well, same with members of your team. Schedule and flexibility and time off is a huge motivator today. It's a huge change in trend. So things here to consider is, number one, listen to your employees. Are you taking surveys? And are you making actionable steps based upon what you learned from surveys of your team? Encourage flexibility in terms of working hours, and focus more on KPI and results, and less about rigid ways and schedules, etc. Promote work-life balance. Teach, don't preach. And shake things up now and then. That was another thing that came out of this study, is keeping your employees engaged by constantly shaking up things prevents burnout. So, and then support their families. So these are just some just general tips that comes from a third party here. We, this morning on our roundtable, we shared some practices that absolutely can be repurposed into the school industry from salons as it relates to flexible hours, schedules, and that type of stuff. We had Candace Gliata. She is a business owner out in California, and she had some great shares on that. Here's the other thing that Candace, and maybe if you get time, you should watch the roundtable we did this morning, because one of the things that Candace has done so well is that, and I think many salons and many small businesses don't do very well, is selling your team on the awesome opportunity you have at your business, the tangible and intangible benefits. Her business, it's Citrus is what it's called. And she's done some great materials that visually show all the different things that her amazing organization and yours offer, and lay it out visually. And what she found is it was not only great for recruiting, like could be great for recruiting instructors, but also it was great as a reminder for people that are already on the team. Literally, there was people that were going to leave her business, and she reminded them of all the other tangible and intangible benefits they had, and they stayed. So a key point here is be unapologetic and be frequent in sharing visually the opportunities you offer for members of your team. The other thing is that, occasionally, if you have leaders and you feel like you've tapped out in terms of your ability to grow that leader, I know I have, don't be afraid to bring in a third-party coach, a private coach that will help catapult someone that has stuck or reached a ceiling, whether it's any of the leaders in your school. And the other thing is bonuses. We have several different ways that we recommend in terms of how to bonus key employees. Maybe that's for another day here. Now, let's see what else I got to share. How we doing here? We're 45 minutes into this. I'd love to read the comments here, but Michelle, I think that we've got another poll. Let's do another poll here, and I think I've got one more point before we wrap up today. All right, so let's see the next poll. It has to do with this. So agree or disagree? We do a good job selling our company's opportunities to the current staff. Now, let me make sure you understand that. We sell the type of things that we offer someone so that they understand what a great place it is to work. All right. So how well do you do here? We're at 50-50 now. And the second question is, how would you rate your employee experience? Do you think your employee experience is poor or excellent? All right, so let's see here. So how many of you agree that you do a good job of making sure your team understands the awesome opportunity? All right, 73% say you agree. And let's just see where we're at in the employee experience. All right, so 27% of you say that you do an excellent job of with the employee experience. This is a little bit of a tricky study here. And essentially, this is a self-rating. And it's very difficult to be objective. Let me give you an example. There's a study out there, and it's a well-researched study, and it has to do with leadership and communication. So here's how it goes. 87% of leaders rate themselves as effective communicators, okay? 87% of leaders rate themselves as being effective communicators. But then if you ask staff, 17% of them rate their leaders as being effective communicators. So there's an inherent bias, an inherent gap, like in a poll like this, because what we're doing is it's a self-rating here. Now, I'm glad that many of you that were asking this question, because if staff retention and finding and keeping instructors is a big challenge, we have to turn over some new rocks. What Linnell, I don't know if Linnell got to share this last week or not, but she just talked about the spa business is exploding. It's more and more difficult to find aesthetic educators. So anyway, great study. We love to get these bite-sized chunk studies and these roundtables. Hopefully you enjoy them. If you have tips, what you want to hear more of, if there's any polls you want us to ask, let us know in the future. We'll do that. I just have a couple quick points before we wrap up today, and let me get to those. And it has to do with something that is not very often discussed as it relates to small businesses, schools being no different, and that has to do with transition planning. And so let me bring this up. So one of the things that we spend time in is helping owners decide if they're going to grow or go. Are they going to grow their business, or are they in a position when they want to proactively to start to work on their transition plan? And I maybe spend, I don't know, 25% of my time, because I was asked to do it, is to work with a variety of clients to really help them proactively plan their next act. But in many cases, it's a different need. It's not so much about them wanting to leave their business, whether it's a school, a salon, or a restaurant, or whatever. It's more about either wanting to slow down or wanting to share the load a little bit, or possibly provide ownership opportunities for key members of their team. What's going on right now is there's an explosion in transition planning. 99% of businesses in the US are small businesses. 64% of small businesses are owned by baby boomers. Baby boomers are at a point, and will be a point, where they're going to get to be at a point where they might want to look at what's next, or like a call I had 2 days ago, they have to work on their transition plan because there might be a health issue. And this is exactly the case. I had a call from someone on Monday. I know her, and it's like, I need to transition, Tom. Everything else is in order except for my business. Anyway, so here is what's going on in transition planning. So it is actually a competitive seller's market right now. Now, if somebody would have said 2 years ago, I want to sell my salon, it's like, well, there's not a lot of buyers, and there's not a lot of market, and there's not a lot of information on that. It is hot right now, and a lot of it has to do with SBA financing. There's such favorable financing right now that doing deals, whether it is selling your business to a key employee, a family member, doing a merger or something, has become much more doable because of SBA financing. And usually about 60% of the deals that I see relate with SBA financing, and the deals are incredible right now. And here's the other thing is, if you had asked me a year ago that would businesses be selling because they're distressed, like in trouble, I would have said yes. But the reality is, a lot of the businesses that are really looking at going into a transition right now is not because they're in a weak financial condition. One of the things we discovered last week is 72% surveyed say they have more cash in the bank than they did before the pandemic. A lot of that comes from government financing. Along with the potential changes in capital gain tax, many are really looking at this. So anyway, Michelle, do just a quick poll here on transition plan. I'm really offering this. The whole idea of the roundtable, guys, is just to really have conversations about things you might not necessarily have. I'm really here just to provoke and stimulate, and hopefully you find this helpful. So let's see, true or false. So this is for owners. I have seriously considered my exit or transition strategy. And let's see here. So, okay, 50%, 45%. Let's see here. So I want to see what comes here. So All right. Let's get more of you to respond, please. Let's see what we got. All right. Let's get some more votes in here. I think some of you are abstaining because it's owners only, but so it's a small sample size. I'd like to explore this a little bit further, but it looks to me like 70% of those where it applies, it's a very small sample size, but 70% of those of you that are owners that replied have considered it, and several of you have not. So it's always good to be looking at your future, and you don't have to really be serious about transitioning to take a look at what setting your business up for to transition, whether it's proactive or whether it's reactive. So, all right, guys, closing thoughts. I am really interested in your feedback here. My closing thoughts is I so appreciate a guy like Jared who sends me an email after the roundtable and says, hey, I'm working on this. I'd love to talk to you about it. It's like, great, the next week you're on a forum. I'd love to get your feedback on this, guys, and see if any of you would like to be guests on the roundtable. Would love to see any other feedback. Let me just take a quick look to see who is on the session with us today. We've got Alcott, Amber, Andre, Andrea, Ashley, Caitlin, Christina, Dave, Dawn, Diane, Diana, Jamie, Jared, Jennifer, Jill, Joe, Judith, Julie. Hello, Justin. Kip is on here too. Lori, Lettertrick. I think I pronounced that wrong. I'm sorry. Lisa, Linnell, Matt, Melanie, Nicole, Orlando. Hey, Orlando, how are you? Hello, Nicole. Hello, Philip, Roxanne, Sam, Susan, Terry, and Trina. So anyway, guys, I hope you enjoy this. Please send me an email. Use the chat. Let's keep this conversation going. That's really what this is about. I'm just here to curate and just keep this thing moving along. I love this industry. I love that you are the guardians for the next generation who comes into the beauty industry. And probably the biggest passion we have at Qnity right now is helping you become successful as a business owner and leader, as well as your other peers in the professional beauty industry and other verticals. But it's really the students. And the thing about students is that just the potential to see this next generation of students have the money skills to match their art and heart, that is what makes us tick. So anyway, we thank you for what you do. We thank you. Andre, I see your question. Jared, if you want to try to grab that one, where profit numbers after owner bonuses. Andre, that is a great question. I'm going to jump in on that one, okay? If you guys will just forgive me. What we did with the 2 to 10 project is because most of these businesses were small, closely held businesses. They could decide to pay owners whatever they want. What we did, Andre, is we took owner numbers out of there and did so it became more apples to apples, because what will happen is an owner can disproportionately affect their compensation due to strictly just tax reasons. So I recommend, and Jared, maybe if you get a little further along, and is take out owner's compensation. And we did is we normalized it based upon the size of the business and number of locations to create apples to apples. So anyway, forgive me for jumping in on that one, Andre, but I thought I'd go for it. So Jared agrees. Okay, wonderful. Guys, I love doing this stuff. I hope you'll join us next week. We want to hear from you. Send me an email. Who are the guests? Get more people involved in this. The payoff is great for all of us. And it's 58 minutes after the hour. I'm about out of breath. And I think I'm going to let you guys go. So thanks again. We'll see you next week. Bye.